Welcome back to the Moneycontrol Livestream. You are watching Markets with Santo and CJ. Well, the dragon has stopped the bear in his track and the bulls are elated. If you look at the last street right now, it's painted a sea of green and we have seen gains across the board. The Nifty 50 and Sensex have both risen by 2.5% each, largely following the Asian peers. China is the main catalyst behind this rally, Santo. The Chinese central bank, earlier this morning cut prime 5-year lending rates by about 15 basis points, the largest amount of quantum of cut that they have taken recently. And that has spurred rally across metals, across the Asian markets as well as Europe. And if you look at the fear index right now, the fear index, the India VIX, basically fell about 4.5 to 5%, which also suggests to me that a lot of the bears yesterday have been caught napping, and they had to forcefully cover their position, leading to the sort of move that we have seen in the index.
Well, I know, CJ, this looks like a very nice setting, It's Friday.
I mean, for a Friday, this is perfect.
Exactly.
I was
just coming to that, on a Friday evening, nice weekend ahead, and markets in the green. But don't get too excited is what I will say. It's just a temporary retreat by the bear or bears, as you would like to call them. Continuously, we've been seeing the same thing for almost now, 2 or 3 months. So earlier this week, you saw the Nifty crossing 16,200 only to fall back, right?
Yeah.
And today we've seen a tremendous surge of short covering, but will this sustain? Well, I'm not at all very confident
Santo,
on that.
From a very, very, very near-term perspective, I'm just glad by the fact that it's 3 o'clock and we have still not shown any sort of signs of the Friday trade that we have been subjected to over the past few weeks, wherein you will see, even if we had gains throughout the session, a lot of those gains will be given back because investors did not want to hold their positions over the weekend. But that is so far not being reflected in the market. And you're talking of China, it seems like at a time when everybody has started fearing recession in the US, in EU, and the lockdowns in China, it seems today's move has suddenly made China the savior of the world. It seems as if probably it has revived the hopes of recovery in that country. And let's not forget, China is the second largest economy and also the biggest contributor to incremental growth in the world. So from that perspective, you can probably justify today's move not only as a short covering move, but possibly something more tangible.
Well, that still remains to be seen because China cutting rates also indirectly reflects it betrays the weakness in its own economy, and we still don't know, how bad things are out there, right? So true, yeah, it's kind of a contrarian when you place it against the rest of the world, where central banks are hiking rates, whereas China, on the other hand, is actually cutting rates. But will this just be enough, to kind of reverse the overall global slowdown in growth that we are talking about? I wouldn't bet my house on that.
Chinese authorities have promised more stimulus measures going ahead, so we will have to keep an eye out on that. That said, let's now quickly dive into some of the stock-specific actions, Santo.
Starting with Coromandel Fertilizers. Now, simple story there, CJ. Fourth quarter numbers were pretty decent. The company managed to hold on to its earnings and now to its margins, and now the market appears to be rewarding it for that. Stock has been steadily climbing close to a 52-week high now, despite all the turmoil in the market over the last 1 week. We are looking at good monsoons globally and also locally. Food prices are rising, and that spells good news for farm income. And the government moves to increase subsidy will help fertilizer companies cover most of the increase in the raw material prices. So on the whole, it looks like a good setting for fertilizer companies in general.
Well, probably the fundamental setting might be great, Santo, but the technical setting on the stock is not something that inspires me a lot. It has been in a very, very consolidative range over the past 10 months, especially from June 2021 onwards. And although it is threatening to break out of that range, it has still not been able to do that. It's still below around that 939 mark where the high was previously in June 2021, and still to break that. So unless that happens, I will still be holding my bets on this stock. If you look at it, from that level, that 940 level is a very, very stiff resistance, and I would expect that some sort of selling pressure will come, and whether the stock is able to take that in and then go forward, it will be very crucial in terms of what sort of gains it will make. If you look at from an institutional point of view, foreign investors have been selling on the highs, selling every rise on the stock. They have been trimming their stake for the past 2 quarters, even though domestic mutual funds have held steady. But FIIs are the main players who have been selling every rise in the stock. So till the time that continues, I really doubt that there will be any extravagant upside on the stock. Probably limited gains, and that is something that I would probably ignore for better, returns out there.
Quick point before you move on to your next stock. See, these are multi-year stories. If you look at Coromandel International, look at the graph of the last 10 years. Okay, the stock has been a 4-bagger and very steadily. So these are not the stocks. You're right. Maybe it won't give any overnight gains, right? But these are typically stories you need to hold on. 250 around was what it was quoting in 2012 and 2022. It's now almost very close to 1,000. 4-bagger over 10 years.
Santo, it's very unfair that your multi-year stories are multi-year stories and my multi-year stories are punts, right? That is how it is. Anyway, talking about not multi-year story, but something of a short-term nature is NMDC. The stock rallied very sharply in line with the sort of jump we have seen across the board in iron ore futures in Singapore. So you talk about China, you talk about London, iron ore futures have jumped. The fundamental reason, of course, behind that jump in iron ore futures is the move of the Chinese central bank and the hope that the Chinese economy will recover and commodity consumption will go up globally. From a domestic point of view, there was also another trigger in the sense that the Supreme Court has allowed some of the excavated iron ore which is stuck in Karnataka, 3 districts in Karnataka, to be exported probably out of the state, and that should also help in boosting earnings of the company, at least in the near term, given that NMDC has some exposure there. So overall, from a pricing point of view, given the sort of correction that metal stocks have taken, NMDC looks like a good pullback bet at this point of time. Whether this move will sustain or not, we will have to wait for a week or so to see whether the move in iron ore futures also sustains. But if that move sustains, then price hikes are imminent, Santo, as we saw throughout 2021, and that will probably make me even more comfortable when you talk about the earnings and the margin performance of the company.
Well, now I'll throw back something that you've been always saying. It's not so much about just price increases, but it's also about demand. Now, just look at iron ore.
Demand will come from China.
Iron ore, for that matter, right? Prices are actually at close to a near 4-month low. They were around $222 and now they've come down to $123. And if you look at some of the global reports, prices for this quarter, the end of this quarter, is seen closer to 120. That is, which means that they will be pretty much around these levels itself. Second thing, now steel production, do you see that going up in a big way? Whenever there is a global slowdown, steel commodities are one of the first hit, and you could see a slowdown in demand for all commodities, steel included. So that said, yes, there may be a short-term trading opportunity in the stock, but overall, I think even the near term is looking a little iffy to me.
Sandy, you talk about steel production. I think global slowdown generally, whenever it has happened globally, right? But at this point in time, it seems like China could be the exception to that, because China is actually trying to recover out of a slowdown given the impact of the COVID outbreak in that country. With China being the largest commodity consumer, that country growing could actually boost steel production not only abroad but at home, and also lead to a higher demand for iron ore. So I would not be so skeptical about production actually going up and demand actually going up for iron ore for NMDC going ahead.
Well, the next stock on our watch list is Mnm Financial. This stock too has been a steady performer. Consistent gains over the last couple of months, is quoting close to about 170 rupees now. Now, this is a stock which has been an underperformer for a very long time, and just recently broke out of its range. That's also led to many brokerages turning positive on the stock. This is a play again on rural income. We've seen a good improvement in Mnm Financial's asset quality, which has led, as I said, a lot of positive rating from brokerage firms. Good monsoons, high crop prices, so more demand for agri equipment, and that is where Mnm Financial Services comes in. A very simple story there.
Yeah, it is a simple story in the sense that it is also a turnaround story, and the management, it seems, is finally trying to get its act right. The improvement here has also been in tandem with what a lot of microfinance lenders are also seeing, in the sense probably there is a groundswell in terms of lending for a lot of these rural oriented and second tier, third tier, urban town oriented lenders. But the thing is that this is just a one quarter performance. We have to see whether Mnm Financial will be able to sustain this momentum in the June quarter and in the September quarter, when actual inflation is now becoming a pain point for consumers. We have seen, companies like Godrej Appliances come out and say that they are actually taking a major hit in demand in May because of the increase in prices, especially in rural areas, after a very healthy March and April. So it seems like the downturn in demand is very, very sudden and very rapid because of the price hikes. And I would still be a little cautious on Mnm Financial in terms of betting on that turnaround story. You can still wait a quarter and see how the company does, how the management fares, and then probably enter the stock, given that there is still a very long runway when it comes to it recovering to the highs that it used to be at. That said, one stock that is flying like a jet right now is Easy Trip Planners. It is an online platform, travel platform, and in an age where tech stocks are getting pummeled like anything, the stock has given close to 500 or even above 500% returns in 2022, Santo. The Q4 earnings were pretty strong, and given that it's a play on the reopening theme, on the travel theme, the demand scenario is obviously very, very strong for the company. If you look at it from the point of view of MC Pro's analysis of his balance sheet and financials, the financials are very consistent, and even the technical momentum in the stock at this point of time is looking very sweet. So Easy Trip Planner, although it has risen already 500%, I would not be surprised if it adds another 100, 200 to that.
Well, yes, the stock has the momentum going for it very clearly, and I think this June quarter will be even better one.
It will be amazing, I think.
Yes. That said, I'm just skeptical about one thing, is that has market already discounted the earnings? Typically when stocks move very fast ahead of earnings, and then they start discounting it well ahead also. So my only fear is whether the best is already behind, and should you be a little more careful now. Remember, the stock is at about 80 times trailing earnings, and even if you have a blowout March quarter for that matter, or June quarter for that matter, still it will be an expensive stock. Can it sustain that kind of growth?
Santo, I believe it can. I mean, if you look at the one-year performance for the stock, it's up about 1400%. If you kept that in mind at the beginning of this year, you would think that probably there is no upside left and everything has been factored in. But lo and behold, we have still seen a 500% jump in the stock in this year itself. And this is not just a 1 quarter, 2 quarter, 3 quarter story, right? Travel itself is becoming a 2 to 3 year story, given the sort of demand backlog that is there, the pent-up demand that is out there. We have not yet seen international travel pick up in a major way, right? We have only seen domestic travel pick up in the December quarter and a little bit in the March quarter, which was also affected by COVID. So we have to still see domestic demand go back to its glory days. On top of that, we have to see international travel go back to its glory days. So there is a lot of fundamental room for earnings to grow, and I don't think the stock price has still figured all of that out.
Escorts, the next stock on our watch list, again a play on rural income. Now the stock has
rural is the theme for you today.
Yes, rural is pretty much the theme. Rather, I'm looking at companies where there is good earnings visibility, given how volatile the market is right now. You're seeing the market rally and then give up most of the game and slip even deeper into the red. So it makes sense to stay with stocks which have a better earnings visibility, and Escorts clearly is one of them. Also remember, because because of this open offer recently, right, you saw a lot of people buying for arbitrage opportunity and then dumping the stock. Even after all that, the stock has managed to remain steady in the 1500 to 1600 range. So this is somewhere I think stock will consolidate and build on its base, climb higher from these levels.
Santo, consolidation is fine, but at this point of time, the stock is lacking any sort of bullish momentum for short term or even 1 year perspective to get into this trade. Overall, the technical setup is quite neutral, weak to neutral. So I would still wait for that setup to improve, so as to make a very clear bet on a 1 year to 1.5 year perspective. Even if you talk about the fundamentals, yes, maybe the demand scenario is improving, the volume growth scenario is improving, but margins are still questionable, right? There is still pressure on the margins. Q4 saw margin pressure in the company, and that is most likely to sustain given where input prices are at this point of time in the June quarter. So margins and the muted technical setup will keep me away from the stock at this point of time.
Well, one stock we would also just like to mention is about Zydus Life, which has announced its buyback through the tender offer. The board just cleared that.
And as well as dividend as well on top of that, if I'm not wrong.
A hefty premium to the current market price. You know, the buyback price through the tender offer is 650 rupees compared to the stock price of around 350. It's climbed a bit in trade today, but the market doesn't seem to be very excited, because if you look at it, quite a huge equity base, and as a proportion of the overall public free float in that,
it's very small.
It's very small, about 1 crore 15 lakh shares compared to the public holding of close to about 25 crore odd shares. So that means a acceptance ratio of barely 1 in 4.
Wow.
So 4%
that does
roughly.
Not sound very
4%. That's very, very low, and which is why probably you're not seeing a very big run up in the stock right now.
Yeah, that said, Santo, in case you missed it today, I want to ask you a question, right?
Sure.
Are we headed for a 2000-like financial crisis?
You know what, CJ, it's very tempting to draw parallels. Often, whenever there's a bear market, people immediately go back and say, how things were back then. And same case goes with bull markets also. Yes, there are temptations very clearly to draw parallels, but having seen a lot of bull markets and bear markets, I'm not so sure any longer.
So, we are human beings and we tend to repeat our mistakes, don't we? Throughout history, that is how it is. And that is what also Moneycontrol Pros Sachin Pal also feels. He yesterday did a story talking about how there are very eerie similarities between the setup, the economic setup, macroeconomic setup just prior to the 2008 financial crisis and at this point of time, in the global economy. He's suggesting that the overall macro backdrop is very, very similar to 2008, and they are expecting, or MC Pro, I beg your pardon, expecting a full-blown financial crisis over the next 6 to 8 months, given the sort of volatility we have across the macroeconomic setup at this juncture. Now, let's look at the similarities that Mr. Pal is talking about. He's saying that, back in 2008, just before the financial crisis, we had a very overheated US economy, a commodity boom, right? Oil prices were soaring, a commodity boom was there, and there was general exuberance in the equity market. Is this something that we have already not seen? US economy grew close to 6%, the fastest growth it has displayed since 1984, right? Last year. We have a commodity boom since 2021, probably the beginning of 2021, and we have seen irrational exuberance in the form of, you talk about Indian equity markets, you talk about cryptocurrencies, right? NFTs, whatnot. The entire of 2021 was filled with such stories. So that is one similarity. Secondly, in 2007-8 as well, there was an oil shock. Multiple factors led oil to move from about $80 per barrel to about $140 per barrel. And it's something similar that has happened recently, in 2022, wherein the Russia-Ukraine war suddenly spiked oil prices from around $85 per barrel to about $140. That was the actual high, about $140 per barrel. And inflation also similar setup. 2006, 2007 saw a spike in inflation in the US, and it was happening at a time when the US Federal Reserve had already started hiking rates, right? And also the US economy has started tipping into recession, because the 2008 first quarter was when the first slowdown in GDP growth happened for the US. And something similar is happening now as well. If you look at the second quarter GDP numbers that will come out, or the first quarter GDP numbers that came out, they showed that there is slowdown happening in the US economy, and at the same time the US Federal Reserve is raising rates. So yeah, I mean, we don't know for sure whether it will turn out to be like a 2008 crisis, and I hope not, given the extent of carnage it caused. But there are eerie similarities for sure.
There are eerie similarities for sure, but also look at it from an Indian perspective. Today the balance sheet of most corporates seems to be in a much better shape than what they were at the time of 2008, because at that time
Santo in 2007, Tata Steel went out and bought Chorus Steel because of its great balance sheet, right? So,
but it took on a lot of debt, CJ.
Exactly.
It took on a lot.
Look at what Adani Group is doing right now, right? It is buying a $10 billion company with a lot of debt apparently on its books. So therefore, I mean, there are similarities. You have to say it.
Of course,
There are
there will
similarities.
always be similarities, but things will.
The actors might change.
The actors might change, but also then, if this is the way it's going to play out, then probably you should see the Federal Reserve, cut interest rates and then flood the system with liquidity again. So,
that used to be the obvious bet, right? And we used to see this sort of tantrums from the equity market, and you will see the Fed come out and say, "Oh, okay. We will hold off from doing."
So if you look at the 2008 meltdown, from the peak of Jan 2008 when markets had peaked, to March 2009 when they bottomed out, it was just about, let's say, 13 months. That was the time of it took for equity prices to rebound.
And we had a sell-off of what, 60%, I think, in the Nifty 50.
More than
and
60%.
In that comparison, we have only fallen, what, 15% so far? Not even 15% completely. So maybe there is a lot of room left for the bears to, enjoy, a lot of time left for the bears to enjoy.
So what are you tracking, CJ? What's on the horizon?
Well, today Paytm earnings will come out later in the night, so that will be something that the market will really watch out for. But apart from that, earnings will of course be the dominant factor as we get into last few days of the earnings season. It's been a long earnings season and a very volatile earnings season. Coal India and Indigo, along with Zomato, will be some earnings that investors will watch out for. It's a very PSU heavy week. A lot of PSU companies are going to come out with their earnings, so it will be very critical to see how one of the value bets, as a lot of people have been calling them this year, how those value bets are performing in terms of earnings. Apart from that, you have the minutes of the US Federal Reserve's latest monetary policy meeting coming out next week. So that will be very critical to see in terms of where the Fed members are standing on balance sheet withdrawal, on rate hikes, and the quantum of rate hikes in particular.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Before we sign off, a quick look at how the market is faring at this point. Nifty 50 at 16,260. It's managed to retain to almost its entire gains it has made early in the day.
Exactly. And almost 3% higher Santo on Sensex and Nifty. And yesterday's loss is basically evaporated. It's now out of the history in that sense, because we are closing above the 16,200 resistance level that you were talking about. Now, of course, it will be critical to see whether we go past the 16,400 level, which is another very stiff resistance for the bulls. The mid-cap index is actually underperforming if you look at it. The gains are about 2.2% for the Nifty mid-cap 100
now
index.
You're being very, very picky out there. What is 2.5% and what's 2.2%?
That is true, but you have to, in a day like this, sometimes you have to go by relative outperformance, But
retail flows are ebbing slowly. There's no...
Let's see how the data comes out today. I mean, we will have to watch out and see what sort of positioning retail investors have ended, whether they are the one who have been selling out or whether they are the one who are, covering the shorts. That will be very important. I'm pretty sure there's the FIIs who have been covering shorts today, but I wonder, in previous sessions where FIIs have been covering shorts, they have not been buyers in the cash market, right, Santo? They were still net sellers. So we have to see how the end of the day data comes out. If FII buying is there, I mean, that could actually be a trigger for the next leg of short covering in the market that we might see on Monday.
Well, with that, thank you and have a great weekend.
Yeah, and please post your comments on the feedback section below, or comment section below, I beg your pardon, and follow us on the social media links at the bottom of your screen. We will catch you live on Monday 9 a.m. Till then, have a great weekend. Take a pause, breathe, do not look at the screen or the SGX Nifty. Chill with your family and your friends.